All right, welcome to this explainer. If you're tuning in right now, you know exactly what's on the horizon tonight. Salesforce, ticker symbol CRM, is about to drop their earnings in just a few hours. And honestly, this is without a doubt one of the most highly anticipated software earnings of the entire quarter. So what we're going to do together right now is walk through the ultimate playbook for navigating this massive report. We're breaking down exactly what you need to look out for, the real numbers that actually matter, and how to position yourself so you aren't caught off guard. Okay, let's dive into this. $20 billion. That is a staggering amount, but that's exactly how much market cap is swinging in the balance tonight. The options market is currently pricing in a massive 7% move in either direction for the stock. That literally means we could see $20 billion in value either created or entirely wiped out in a matter of minutes. The stakes here are incredibly high, and you absolutely need to know how to navigate this level of volatility. To make sure you're fully prepared, here's our game plan for today. The setup, the cheat sheet, bull versus bear scenarios, your specific trading game plan, and finally, the bottom line. Let's just get right to it. Starting with Section 1, the setup.
We really need to establish why this specific earnings print is just so absolutely critical, not just to Salesforce, but to the broader market as a whole. You see, you have to understand that Salesforce isn't just another software stock. They're up about 20% year to date and trading right up near all-time highs. But more importantly, they act as this massive bellwether for enterprise IT spending. They're basically the proxy for AI adoption and cloud growth in the corporate world right now. Because of their sheer size and market penetration, if Salesforce misses their targets tonight, trust me, the shockwaves are going to be felt across the entire software as a service sector. It sets the tone for everything else.
Moving on to Section 2, the ultimate cheat sheet. When that report drops tonight, you're going to see a flashing headline revenue number right out of the gate. But we're moving past that headline to focus on the actual underlying numbers that will truly move the market. The very first metric on our cheat sheet is cRPO, which stands for Current Remaining Performance Obligation. Now, I know that sounds highly technical, but simply put, it's just a company's backlog of contracted business that they actually expect to recognize as revenue over the next 12 months. For tonight, the estimate you need to watch is right around $26.5 billion. This is absolutely crucial. If they beat that $26.5 billion mark, it signals that enterprise demand is fundamentally healthy. But if they miss it, man, that is a massive red flag for future growth, regardless of what that headline revenue number says. Now, what's really interesting about this slide is breaking down the rest of the critical numbers you need to be watching. First up is guidance. Q3 revenue expectations are sitting right around $9.45 billion. But honestly, the whisper number on Wall Street is higher than that. They absolutely must guide up, or at the very least in line. Otherwise, the stock is going to sell off even if they crush Q2. Then you've got the AI metrics, specifically around Agentforce adoption, which we'll get to in just a second. And finally, margins. Operating margins are expected to come in around 32%. The holy grail here for investors is if Salesforce can show margin expansion while still aggressively investing in AI. But let's circle back to those AI metrics for a second, because this is the ultimate wild card tonight. Listen, vague AI comments just won't cut it anymore. Analysts are completely done with narrative fluff. They are actively demanding hard, concrete numbers on Agentforce. They want to hear about actual deal sizes, actual customer counts, and real pipeline generation. If management gets on the call and tries to skirt by with just a bunch of buzzwords, the market is going to punish them. No question about it. Which brings us to Section 3, bull versus bear scenarios. So the crucial point here is understanding this setup kind of like a heavyweight fight. In one corner, we have the bull case. This plays out if they beat revenue by $100 million or more, raise full-year EPS, and announce, say, 5 or more new enterprise Agentforce deals. The result? The stock likely gaps up 5 to 7%, breaks straight through resistance, and actually triggers a massive rally across other software names like Microsoft and ServiceNow. But in the other corner, we have the bear case. If Q3 guidance is light by even 1%, or if that cRPO backlog number we talked about comes in flat, watch out. The stock could drop 6 to 8% incredibly fast. If that happens, you really need to be watching for support near the 200-day moving average as a potential buy zone. Let's ground ourselves with a reality check for a moment, though. The absolute most probable outcome tonight is actually an inline print, maybe a slight guidance raise, resulting in a pretty muted 2 to 3% move either way. So where's the edge? Well, the real money is going to be made on the call commentary, not just the raw numbers. Investors need to pay extremely close attention to management's tone on the earnings call itself when they're getting grilled by analysts. All right, Section 4, your trading game plan. Your strategy tonight really has to adapt to your specific persona in the market. If you're a trader, hear this loud and clear. Do not trade the first 15 minutes after the print. The spread widens out, algorithmic fakeouts happen rapidly, and it's just incredibly dangerous. Wait for the second 15-minute candle to actually confirm the direction. Now, if you're an investor, your strategy is to watch for a 5% or more dip on a guidance miss to begin scaling in. And if you're currently sitting in a cash position, this is kind of a toss-up, but you're much better off buying the reaction rather than trying to guess the print beforehand. Remember, great companies can have bad quarters and still be fantastic long-term buys. Let's move to and see how this builds for those long-term investors. Here is your exact step-by-step scaling technique. Step 1, you wait for that 5% plus dip on any guidance miss. Step 2, don't buy it all at once. Scale in with just 1/3 of your intended position tonight. And step 3, add the remaining position over the next 2 trading sessions, provided the broader macroeconomic picture actually holds up.
And that brings us to section 5, the bottom line. If you take away just one philosophy from this entire explainer, let it be this: buy the dip if it comes, respect the guidance, and never trade the first candle. Yes, Salesforce is currently priced for absolute perfection, trading right near those all-time highs. But, they also have the powerful AI narrative, these really healthy 32% margins, and a massive installed customer base to actually deliver on those expectations if you follow these rules.
So the table is set, the metrics are defined, and the strategies are laid out. Now, I want to hear from you. Are you buying, selling, or just watching from the sidelines tonight? Drop a comment below with your personal game plan for this massive earnings print. Let's talk about it. Thanks so much for joining me for this explainer, and I will see you on the other side of the numbers.